Good morning. This is Richard Pazin for the Pazin Report. It's 8:15 a.m. Eastern Time, Thursday, May 10th, and this is a sample of the stock market portion of the Pazin Report. We're looking at a Dow Jones Industrials Cash Index candlestick daily chart, and we use the daily charts to primarily show the L3 short-term trends. L3 stands for level 3. It's a degree of magnitude. It's a label to tell us what kind of trend it is. And by short term, our definition means intra-month. So this trend will last a couple of days to a couple of weeks. And you can see we had an L3 bottom, it rallied into an L3 top, pulled back to an L3 bottom, rallied to an L3 top, pulled back to an L3 bottom, and it's now rallying into the forecast for an L3 top next week. Now, whenever possible, as we're moving these labels around trying to pick bottoms, if we're confident of the time and price objectives from our model-based research, we'll draw a little box, which we call a window of reversal. And we try not to move that window of reversal. We may move it up to a certain point to where we think we've called the top, but after that, we'll leave it there for historical reference to see how accurate we were. However, later on, we may actually move the label related to that window reversal because we may learn we didn't really call it correctly, but we'll leave the window reversal there so we can see whether we were right or wrong or somewhere's in between. So we'll show a label and a window reversal. If we lack confidence and can't really establish a window reversal, we're at least going to show you the label for about the time we expect a top or bottom. In other words, we think we can be more accurate on the time aspect than we can be on the price aspect. Anyway, this forecast for the Dow Jones Industrials is that it's in another L3 uptrend. It's probably going to spend most of its time trending up and a small amount of time trending down into the next L3 bottom, which probably implies it's in a still larger trend. I'll show you that in a moment. At any rate, look at this chart. We also use a 5-day average on all our charts to show us, say, a first support short term. We'll use a 40-day average, which works a little better in the commodities than it does in the financial markets. We'll also look at 100 to 200-day moving averages. We use the 5-day stochastic on all our charts for short-term overbought, oversold. Now, inside the model, there are many different types of indicators. We look at fundamentals, we look at economics, but I'm just giving you what we basically just put on the chart. Now, I'm going to wrap this video up. I want you to think of larger trends. These L3 trends build into larger L1, L2 trends that are minor, major, intermediate, inter-year trends. They last 1 to 5 months, with the L2 the shortest, but the L1 at times can be just as short as the L2. Look at this, late 2012, L1 uptrend. It was broken up by the L2 for the most important correction, and then it rallied up for another L1 trend, and it had an L2 for the most important correction. And now it's rallying into an L1 top in June, and we think the Dow Jones is going to 15,300 to 15,700. Now, I'm also going to switch to the NASDAQ Composite Index to show you a little bit of a long-term analysis this week that has biased all of our long-term analysis. This is NASDAQ Composite, but it's a monthly chart, and those L1, L2 trends build into 3-year long-term business cycle trends that can make or break your business and investment year. They'll last several months to a couple of years. We believe in 2007 there was not only a 3-year but also a 9-year cycle top, a 3-year bottom at the 2009 recession, along with 9, 36, and 72-year cycles. In other words, something all the way to super cycles. A 3-year top broken up by the QE2, a 3-year bottom. Again, all this QE stuff's kind of distorted the trends a little bit. Have another 3-year top. We think the next top is not due to 2014. We think the stock market will be at a record high then, can be much higher. There will be a 3-year cycle to cause some kind of correction later this year to early next year, but quite possibly no more than 5%. So basically we're kind of ignoring that for now, and we're just suggesting to be bullish into 2014. Now, along the way, we'll have some of those L1, L2 signals for you, such as in June, that can create some kind of correction along the way. This is Richard Pazin. I hope you will visit our site at ag-financial.com. Sign up for the 2-week free trial. We have stock indexes, interest rates, currencies, and 30 commodities, macroeconomy, climate, alternative investments, real estate. Thank you.